What does your fourth quarter shape up as? U.S. GDP, EU GDP. What does the final 3 months of 2020 look like?
So for us, we've been spending the last sort of 4 weeks really downgrading that outlook for Q4. I mean, Q3 still looks good. Q4, we've been reducing. So in the US now, we've got a quarter-on-quarter view of just under 1%. We're looking at about 0.8% coming in for that final quarter. Of course, it does depend a little bit on the momentum coming out of Q3. We'll learn that towards the end of this week when we get the Q3 numbers. But for Europe, perhaps even a bit softer. I mean, obviously, Europe is really the epicenter of this re-emergence of the virus coming through now, and we are seeing restrictions being reimposed. So we're seeing growth that could come in almost close to flat. Now, we're not looking at contraction coming through, so there's some relief there. But, these economies are desperately weak. We've seen huge drops in output in European economies in the second quarter. We are expecting pretty strong rebounds in Q3, but we should have been seeing ongoing growth coming through. And if we do get something that's closer to zero across European economies in the fourth quarter, that suggests a pretty soft backdrop for 2021, and it suggests that it's going to be difficult to get the people back in jobs. The unemployment rates are going to be trending higher.
David, so much of this is the great divide between American finance and economics, which is sort of growthiness and percent change, versus the level that I see in old world economics. Carl Weinberg mentioned this earlier this morning. What is the level that you see of growth and all these other trends out 36 months or 48 months? Do we get back to normal, or do we level out at a lower range?
I think we're still rising. I mean, our projection is not that we level out at a lower range, that we're sort of trapped in a sort of somehow glass ceiling that stops the level getting back. It's just that we've dropped so far that even with these large pickups coming through, the level is still far short of even where we were at the start of 2019. At the end of 2019, and of course that's not where you've got to get back to. Normalcy isn't about getting back to the end of the 2019 level. It's about re-establishing the trend growth that's emerged over that period, and that's going to take a long time. Now, there are a lot of unknowns. What we do know is that the economies aren't going to get there on their own. The monetary policy authorities are continuing to provide a lot of stimulus, so that will give some tailwinds to growth. We are expecting when we're seeing fiscal stimulus across the Eurozone already being extended, we're expecting that to come through in the US under any electoral scenario. We do expect another short-term stimulus package to come through, but there is a prospect under certain electoral scenarios that you'll get a medium-term boost come through as well. Obviously, Biden with control over the whole of Congress, or perhaps a little bit more unlikely, President Trump in a second term with complete control over Congress, would probably be able to put through some medium-term fiscal stimulus. And thirdly, what markets have been looking for some time is a vaccine. And looking at next year, one would have to suggest the likelihood is we will see a vaccine start to roll out, and that will have a positive impact on the economies. So all of these things are going to give the economies some further impetus, but they really have a lot of ground to recover.